Hello student, I am Assistant Professor Sayali Patil from Department of Commerce of Sarhad College of Arts, Commerce and Science, Pune. I am discussing with you one chapter from your NET set examination for commerce. As you know, the paper 1 is common for all students, but the commerce student have to attend the 10 different chapter related with your commerce subject, which is study from your 12th standard, 11th standard to your MCom. So it is you need to prepare with the vast study for this chapter. So out of this, I am taking the one important chapter for discussion today. So let's see the syllabus of this chapter. Unit number 10, that is the last unit of your syllabus, and it is recorded, or it is concerned with your paper number 2, and it is very important. The student, due to his complication, the student are avoiding to learn it. Otherwise, it is more than 6 questions are included in your syllabus, and compulsory questions are there. Regularly, these questions are present in your paper number 2. So what is the syllabus? There are the two different points mainly highlighted here. There is the income tax and corporate tax planning. So under the income tax, when you learn your TY, you will learn somehow the points regarding your basic concept. That is what is income tax, types of tax and all those things. So such that some basic points we learn again in this part. But somehow time gap, we forget about these basic concepts. So first we discuss in this point, we will discuss some basic concept, and then we move toward the checking and calculating, or the whatever your MCQ parts. So the first topic include, or the based on your income tax, and it includes the basic concept, residential status and tax incidence under the residential status. What is exempted income, agriculture income, computation of taxable income under the various heads, deduction from gross total income, assessment of individuals and clubbing of incomes. The meaning of all the points and the question related with the it will discuss after the each point. So international taxation, double taxation and its avoidance mechanism, as well as transfer pricing is the second chapter. Then chapter number 3, corporate tax planning, concept and significance of corporate tax planning. Tax avoidance versus tax evasion, that is the two concepts are there. And techniques of corporate tax planning, tax consideration in specific business situation, make or buy decision, own or lease an asset, retain, renewal or placement of asset, and shut down or continue operations are the part of your corporate tax planning. Deduction and collection of tax at source are advance payment of tax, and e-filing of income tax return is the syllabus of your lesson number 3. If you concentrate on the basic concept, it is mostly questions are related with your topic number 1, which is very important, and all theoretical backgrounds are asked, except the various heads under the computation of taxable income under various heads, that will be discussed detail. That is, if the salary income is there, income from house property is there, income from other sources are there, and all the points regarding it will be considered under this point. So such type of headings are learned in proper manner, and when you learn it in proper manner, make it note down, understand this concept, understand the somehow process of how to analyze your incomes, allowances and all those things under the heads of various income. So it will give you the full marks in your NET set examination. So let's start with your next point, that is the basic taxation concept. What are the taxation concept you have to learn in proper manner? Make sure when you learn this, it is very important, learn with the sections first. So what are the sections? It is necessary. I'm discussing one by one points with the section. So it is very important, if I explain any section, write it down. If you and learn through my videos, it will definitely helpful to you. So when we learn the sections, it may be in your matching sections. So income is given, and in the next section or next part there will be a section recorded under the another A or B point. So you have to match your income with the particular section. So matching questions are there for this. basic concepts. So we learn the first concept, that is the income. By this way we learn all concept one by one. So the first concept, that is your income. What is the income? So first let's see income tax. The concept of income is included in section 2 subsection 24. Section 2 subsection 24, income tax is a tax on the income. So therefore the concept of income included, concept of income is very important. The term income is inclusive and not the exclusive. It shall include not only the item which are specifically mentioned in section 2 or 2 subsection 24, but also those which can properly be interpreted. As per this definition, income includes the following items. For example, profit and gains, that is the profit generated by businessmen, dividend or declare or the paid by the company to its shareholder, voluntary contribution received by a trust created wholly or partly for charitable or religious purpose. But these do not include the contribution which are made in specific direction that they shall form part of corpus of the trust or the institution. So the value of the perquisite or the profit in lieu of lieu of salary taxable under the salaries. For example, value of rent-free house or accommodation provided by the employer. Any special allowances or the benefits specifically granted to the assessee to meet his expenses wholly, necessarily and exclusively for the performance of his duties of an office or employment or on a profit, for example, convenience allowances, etc. Any allowances granted to an assessee either to meet his personal expenses at a glance where he perform his duties of his office or the or expenses at the place where he perform his duty of his office, or to the compensate him for the increased cost of living. For example, it is a dearness allowance. So dearness allowance is given for the meeting of such points. So the next point, the value of the any benefit or perquisite, whether convertible into money or not, obtained from company either director by the. So the value of any benefit or perquisite obtained by any representative assessee or by any person or whose behalf or for whose benefit any income is receivable by the representative. So income may be anything. So any sum chargeable to income tax under section 28 or 41 or under section 59. For example, Mr. X is an agent of ABC Limited and he gets the compensation of 30,000 from ABC Limited. Due to termination of his agency, it is an income to X. So the profit on sale of a license granted under the Import Control Order 1955 is also income. Cash assistance received or the receivable as a drawback to any persons against the export under any scheme of the Government of India. Any duty of customs or the excise repaid or the repayable as a drawbacks to any persons against a report export under the custom and the central excise duties drawback rules 1971. Any capital gain chargeable under section 45 or under section 112A with effect from 1/4/2018. The profit and gain of any business insurance carried on by a mutual fund or mutual industry insurance company or by a cooperative society computed in accordance with the section 44. The profit and gains of any business of banking including providing credit facilities carried on by a cooperative societies with its member, and it is with effects from 1/4/2007. Any winning from lottery, crossword puzzles, race including horse race, card games and other games of any sort, or from gambling or betting of any form or a nature whatsoever. Any sum received by assessee from his employees as a contribution to any provident fund or the superannuation fund or any fund set up under the provision of Employees State Insurance Act 1948 or any other fund for the relief of which such employees, any sum received by Cayman insurance policy including bonus, interest, salary, bonus, commission or remuneration received by the partners from the firm, any gift in cash or kind or any exceeding rupees 50,000 received without consideration with effect from 2009. It is the amount which you can say all the consider as income. What are the rules regarding the consider the income? Any income earned whether legally or illegally is taxable. Means income tax department doesn't bifurcate whether you are earning it is illegal or illegal. You have to just pay taxes on it. That means illegal or illegal both incomes are considered. It is not necessary that income should be received regularly or periodically. You can receive it monthly, weekly. It can also be a lump sum receipt. It is also essential that income must be received in cash. It is not essential. It is not necessary that you should receive in cash. It should be in kind. Whether the particular receipts is income or not, it is decided at the time of first receipt. When it received first, it is decided whether it is a temporary or permanent cash accrual basis. If the amount is not income at the time of its first receipt, it cannot be treated as income under the changed circumstances for the purpose of Income Tax Act. Income can be taxed on the receipt basis or accrual basis, whichever is occur earlier. It also depends upon the accounting method followed by that particular assessee or the firm which paid income. Income should be received from outside. It cannot be internally generated by means of books of entry. A person cannot earn income from himself. Profit on revaluation of asset is not an income for the tax purpose. Personal gift received by a person on occasion like birthdays, marriage, etc. is not the income of assessee. Income tax is a tax on the aggregate of all income earned or the received by assessee during the year. So the PIN money received by the spouse for her or his personal expenses cannot be treated as a income. So the term income also includes loss. Loss is nothing but the minus income. The benefit of carry forward and the set of losses is available. So the revenue receipt is taxable as an income subject to some exemptions, and capital receipts are normally not taxable to certain exemption provided in the Income Tax Act. With the help of above points, you can say that we may conclude that all the receipts are not income, whereas all income should necessarily be receipt. It includes some other receipts which are ordinarily treated as income, which is derived from the definite source of income. These definite source of incomes are salaries, income from house property, profits, gains, business or profession, capital gain, income from other sources are there, which will be discussed these points in your next point, that is the next in your next video. Thank you, student, and please subscribe our channel, and if you like it, say like or press like button. Thank you.